Welcome to the week ahead. I'm Darren McDermott. Today I'm joined by Philip Shaw from Investec in London to have a look at what he expects to see from the markets this week. Philip, now let's begin with the US. We had the FOMC meeting last week. We will have non-farm payrolls out on Friday. So what sort of figures are you expecting to see?
Well, the FOMC decision was fairly well absorbed by markets. I think markets last week were really looking towards what was going on in emerging markets really for their main steer. But the continued tapering from the FOMC really didn't take anybody by surprise. And US markets, if they're looking for specifically domestic factors, then of course they'll be looking towards the payroll numbers towards the end of this week. Now, last month we had a poor payroll number with jobs rising by 74,000. That was largely because of the cold weather. But of course, in many parts of the US, the weather's been even worse in January than it was in December. So that really opens up a considerable degree of uncertainty with this month's jobs numbers. And really, I think we should treat the expectation of a 180k gain this time around with a fair degree of skepticism.
And moving over to the Eurozone, we have the ECB meeting on Thursday. What sort of tone are you expecting from Draghi, and do you think deflation fears are actually justified?
Well, the big news from the euro area last week was the news that inflation had fallen back to 0.7%. And being that far away from the ECB's target of below but close to 2%, it really puts more pressure on the European Central Bank to present a policy which stimulates the economy and therefore adds a little bit to price pressure. Now, I don't think that deflation fears are really fully justified, but nonetheless, the ECB is going to find it more and more difficult to miss its inflation target unless it is serious about presenting another policy. So it's not exactly clear what the ECB will do. We don't think there's going to be any cuts to rates this week, but perhaps Mario Draghi will signal that in some shape or form it's moving closer to a new program, perhaps a new LTRO with incentives to lend to the private sector. Or at the beginning of last week, Mr. Draghi was talking about the possibility of banks buying securitized loans from banks. So it's really the press conference which we think will be important here rather than the rate decision itself.
We also have the Bank of England meeting on Thursday. What will you be watching out for at this meeting?
Well, with respect to the MPC decision, we're really not looking at any policy change for quite some time. So the bank rate will almost certainly stay at 0.5%. and the asset purchase target at 375 billion. The key issue, though, in the UK monetary policy debate is what the MPC is going to do to its guidance. Unemployment has fallen to 7.1%, which is very close to the threshold set by the BOE of 7.0%. And really what we're looking for is some sort of update on the guidance strategy from the Monetary Policy Committee. Now, we might get something on Thursday, we're not sure. The other alternative is really for the Bank of England to wait until its quarterly inflation report on Wednesday next week to unveil what it's thinking. But it's really guidance which is most important for monetary policy in the UK. The rate decision itself really we think is almost inconsequential this week.
Philip, thank you very much. Well, viewers, do stay tuned as we have plenty more interviews coming your way.